Hello, Oracles. Today I'm going to go over all of my September dividend payouts that I received for this last month. I'm going to do this at the end of every single month so you guys can see where my dividends are coming from, where all the growth is going to, and this way you guys can see that track and progress all along so I can be transparent with you guys to show you what I'm doing with my portfolio. I'm also going to be sharing a little bit of news about what we got going on tomorrow. And tomorrow night's live stream is going to be covering a lot of what is going on this week. We've got the potential war going on in the Middle East. We've got the port strike going on. We've got the jobs report coming out tomorrow morning. That alone by itself could move the market significantly. So really pay attention to the jobs report tomorrow. Again, we're looking for expectations of a 4.2% unemployment rate and job openings of 144,000. So if we come in at higher than 4.2% or lower than 144,000, market might not like that. So pay attention to that in the morning, and then we'll discuss all of that tomorrow evening. Now, if you enjoy watching content like this, going over the market, dividends, stocks, and all sorts of investments, please hit that like button down below and subscribe to the channel. All right, so this past month was one of my higher months, and I'm going to discuss it as I get into it. I had a learning curve over this last year about going over dividends. I was focused on high yields earlier on, saw a lot of that coming in. And then for me, I kind of was like, I noticed that there's a lot of NAV erosion. It was my learning curve. Again, I saw a lot of the portfolio value shrinking, even though I had high dividends. Like that income means nothing if over time I'm going to lose all of that money. So again, I had that learning curve, and I'll show you guys in a minute what I mean by all of that. So now I've built myself to a much more stable place when it comes to dividends and dividend growth, and I'm weaning myself off of those extreme high yield dividends. So I can now find myself at a place where I'm going to be growing again. So I have a little bit of that trimming to do, a little bit thinning out to do, and I'm growing up nicely in other areas. All right, so looking at the September column here, Coney brought in 5216, QQQI brought in 5535, WDTE brought in 4411, and YMAX brought in 2245. So again, these are my extreme high yield dividend ETFs. So this money here, I am strictly just putting into cash and then distributing it in other places. And I'll show you guys in a minute what I do on my portfolio. For those of you who haven't seen, so all of the money in the blue section and the green section all get put into cash, and then I distribute that elsewhere. So then I brought in 2095 from SVOL, 1698 from QQQI, 1472 from SPYI, 1442 from JEPQ, 1839 from TLTW, 3119 from ARCC, 864 from JEPI, 837 from AGGH, 1395 from Maine, 572 from O Realty Income, 517 from Devo, and 973 from PLD. Now we go into my long-term ETFs. So these are ones that I'm holding, and I do drip all of this money back into those ETFs. I brought in 1145 from VYMI, 1213 from SPYD, 1162 from SCHD, which just went through a split. That does go live on October 11th. I brought in 799 from VYM and 773 from DGRO. And now if you guys are interested in knowing what my top 5 ETFs are, I did make a video about that. I will link that in the description down below to go over what my top 5 are and why I like those. Now in this blue section down here, these are all my individual companies that I got dividends from this month. So I got 540 from UPS, 387 from ExxonMobil, 375 from Pepsi, 275 from Home Depot, another 275 from McDonald's, 56 cents from Google, $1.68 from Broadcom, $2.10 from United Healthcare, 95 cents from Cintas, 75 cents from Microsoft, 90 cents from Visa, 70 cents from Eli Lilly, and 47 cents from Meta. So now these here, again, very small amounts, nothing to write home about right now, but these are the companies that I'm rolling money into from all of these plays up top here. And again, I'll show you how I distribute all of my money and how I decide what I'm going to do. But all of this money here gets distributed down to here. And over time, these are just going to continue to build and build and build. And there's significant dividend growth coming from all of these as well. And that growth over time is what is going to give me those income raises every single year. Now, I also brought in $3.17 from Bank of America, but I sold that off. So that $3.17 ended up becoming cash, which I put elsewhere. So total from dividends in September, I brought in $423.02, which is up from the $358 last month. Now, we do like to go quarter over quarter because, again, a lot of these go paid out by the quarter, and a lot of my individual companies pay out in September. So in June, when I had that it was $481, I'm down to $423. A big reason for this is because you look here, KLIP, I brought in money from, I have since sold that off. high, I brought in 947. I since sold that off. And I also sold off some of my Coney at that time. So I brought in even more money from that during that month. So that month there it was higher. And again, I've thinned out of more volatile and NAV erosion type plays to get myself into more stable plays to set myself up here. Then when it comes to interest, I brought in $37.16 in interest, whereas I only brought in $24.82 in interest back in June. So that's because I've been stockpiling a lot more cash, awaiting what is going to be going on in the future with a potential recession. So overall for the month, based upon dividends from my stocks and my interest from cash, I brought in $460.18, down from that last quarter of $506.24. And then when I compare that to September of last year, I brought in $602 last year. But again, this was with TSLA that was in there. I had a lot more Coney. My high yield income plays, I had like hundreds of shares that I don't have now. I have 50 shares of each and 16 shares of a WDTE and 16 shares of QQQY. So again, much smaller shares. So my yield is much lower. So I was down 23.62% year over year, but my NAV erosion and my net worth and portfolio growth are much stronger now. Now looking year over year, I have already brought in $5,118 this year, and last year I brought in $4,226. So I have already given myself a 21% raise in income over last year in dividends and interest, and I still have 3 months left to go. So I don't know about you guys, but would you be interested in a 21% raise in your job? So this is a 21% raise in income for me from just my dividends. And that doesn't even include the $1,500 a month I'm bringing in from rent from my tenant, because last year I had a lot of that money put into treasuries and I invested most of that into the house to be able to bring this in. So I'm now bringing in $1,500 a month, and that's not even included in the $5,100. So again, passive income generation sources are the way to go, especially if you think you're going to get into a recession. But either way, it's always good to have this as a safety net. And that's $5,100 every single year that I'm bringing in currently. And again, this is still growing as the year is going to go on. And if I'm going to be bringing in, let's say, $450 for the next 3 months, that's going to be another $1,350. So we're looking here at about $6,500 that I'm going to be bringing in. And that's just from my dividends and interest. That doesn't even include the rent that I have coming in as well. So looking at this on a monthly basis, you combine the $1,500 with this, I'm bringing in almost $2,000 every single month. Now, again, you never know what's going to happen. Maybe you lose your job. Maybe we do get a recession and it gets nasty. $2,000 a month is pretty significant to cover a lot of my expenses. So all that cash flow generation is so important. Now, coming back to what my strategy is here, again, I have my different levels that I want to have everything set at. And right now, I want to have 9% cash sitting in my portfolio, just kind of ready, sitting there for when opportunities present themselves. So I'm just below that right now, and I don't have any cash to spend. I spent all of that today already. So right here shows me that I have $179 that I need to spend to get to the levels that I have set for all of my different categories. So for instance, my individual stocks, I want to have each one of these at $475. So I need $87 to fill that up. And each one of these will tell me where I need to add that. So I need to add $26 to Procter & Gamble, $11 to JP Morgan, $18 to Flynn, $21 to Microsoft. Then up here, I've got different criteria. So for my long-term ETFs, I want to have $1,200 in each. So I need to add $1 to CGDV. Up here for my stable income plays, which generates a lot more income for me, that's going to allow me to add more money faster to a lot of these other plays, I have to add $91 total. That's $41 to PLD, $21 to Devo, $18 to Realty Income, and $12 to AGGH. So again, as I get more money coming in cash flow from these positions here, and the $50 that I add every single week from the outside in my regular job, I will be able to put the money into here and whittle down on this. And then once I have met all of these criteria here, I change this to 10%. And then I get this to 10% and I increase all of the criteria for these as well. I am constantly growing my portfolio, so I'm not missing out on any upside, because I don't know if we're going to get a recession. But I also have the protection for myself in case we do get a recession. I'll have about 10% cash built up down here, constantly preparing on both ends of the spectrum, ready for the stock market to run and ready for it to pull back. So the total yield I have for my portfolio right now is 8.38%, and that is a 9.83% yield on cost. And then looking at my snapshot here, my portfolio value is about $55,500 with an all-time return of $16,500 at about 38.4%. Monthly dividends coming in at $389, Again, that yield is 8.38%, yield on cost is 9.83%, total monthly passive income is at 1889. And then I have set down here criteria for, hey, at my job, obviously the whole point of all this is to be able to get myself to a point where I don't have to work anymore. I can work if I want to, not because I have to. So I work a lot of hours at my job. And so here I'm getting close to the point where I'm not going to have to work as many hours. So if I want to work more, I can, because then I can speed up this process. Or if I'm just kind of feeling burned out, I don't have to work. So this is where I'm at here. And then percent to retirement, I'm at 44%. So again, I just need to keep on building that up. And these numbers here are just kind of telling me, hey, this is my progress that I'm making. This is my light at the end of the tunnel. As this number grows, that means I'm getting closer and closer to my goals, which is not having to work anymore. And then my total net worth, which does fluctuate because based upon the market, it's going to go up and down. And a majority of this is in my 401k, is almost $200,000, which is my goal for the end of this year. So I should be able to hit that, but we shall see if the market continues to go up or if we get a massive pullback. So there it is. Those are all of my September dividend payouts. I'm very excited with the growth that I've been going. Again, a lot of learning curve over the last year when it comes to learning about how dividends pay out, yield, NAV erosion, all of that stuff. If it's something you guys want to learn about, I'm going to keep on sharing all of that information with you guys. Again, I'm newer to this. I'm learning as quickly as I possibly can, and I want to share that information with you guys. And if you're interested in investing, the best time to start is now. Just get in there. And I'm not going to give financial advice and tell you what you should or shouldn't buy, but the most common place to go, the best place to start historically would be just the S&P 500. Get into an ETF like the SPY, the VOO, which I own, which is VOO, just to kind of get money in there, get invested. Typically, if you're going to have a 401k from your job, you're going to be getting into a lot of these broad funds anyway. So you're basically just doing it on your own versus having your 401k just do it for you. And this way you can take some time and learn and say, hey, well, what is in this ETF? What companies are in there? Cool. Now let me learn about these individual companies to see if I want to spend money on any more of them individually. And again, if you're interested, I'll have that video in the comments below about, my top 5 ETFs that I have invested into them and why I'm invested in those as well. So you guys can take a look at that in the comments below. So thank you guys so much for watching. I appreciate all of your support. Have a great one.